Bitcoin was trading 1 for 1 for the Nasdaq for the last few months until the last month, and on Friday we had the inflation print, which was pretty aggressive, and that shows determination from the Fed to do a lot of monetary tightening. Crypto is a highly volatile, cyclical, high beta asset. And I think, people like me were getting really excited the first few months of the year that Bitcoin was no worse than the NASDAQ. And that was an upgrade from previous cycles when it was always worse. But alas, the last month it has slumped. And that's liquidity being drained from the system. But the bigger thing here is, Jeff, is what is crypto telling you? Because the last two times that we've seen this, notwithstanding the crypto-specific problem last spring, we saw crypto blow up in late 18. Which preceded the stock market. And we saw it again during COVID, and that preceded the stock market. So I think that what we're now seeing is an early warning signal, the canary in the coal mine telling you that equities are a big problem. And by the way, the equity bond stretch is as high as it's ever been in the last 50 years.
Charlie, there's a lot of excuses to sell crypto at this point, and the big one the industry is focused on has been that correlation with the tech sell-off, that every time there's a tech rout, then crypto gets hit as well. But this week we've also seen the gating of some of the funds, and Binance, the latest to join Celsius, not allowing investors to have access to the money. So almost hallmarks of the financial crisis all over again, but in the crypto market. Just talk to the significance of that, because regulators clearly not in this industry yet, which means that we have no idea really what sort of liquidity exists in crypto.
Yeah, the underlying crypto markets are deemed pretty liquid. On-chain volume is typically these days around $32 billion. We measure it block by block on my site, ByteTree.com. There's off-chain liquidity as well from CME futures, and then you've got the crypto exchange futures, which can be typically $30 billion a week. I mean, a day. It's a pretty liquid asset class. We're saying that gold's a daily $145 billion asset, and Bitcoin, not crypto, is a $40 billion asset. Now, maybe that's going to be hurt in the short term, but we are dealing with a proper liquid market, and that's why people have become interested in it. Gating by these companies is really, really bad news. I mean, it's a confidence blow. But your last guy was talking about 19,000 tokens. I mean, we're the first to tell you that 99% of those are worth zero, and I think most people know that. This is this is just like .coms, but there are some winners because this space is real, and we are looking for the winners over the next 5-10 years. That's why we're here. Obviously we're pretty skeptical about many of these projects, but when prices go down, you get losers. When the tide goes out, you find out who's not wearing shorts, and back to Buffett again. So tough times.
Charlie, where do we look for some of that pain in the crypto sector? Is it going to come from the string of cryptocurrencies, or should we be more concerned about stable coins, given that was where we saw the first implosion around Luna Terra the other week?
Yeah, well, stable coins in theory are low-risk investments. In practice, they prove to be ultra-high in some cases. But let's not forget, the ones that have blown up are algorithmic stable coins. So this is a money market fund without any money in it, in simple terms. So, some people have thought that's a good idea, and the people in crypto who really want to have the decentralized experience of the full want a virtual dollar. But, most of us from the old world of finance don't think that's a good idea and would prefer a real dollar. And so if you look at something like Circle, USDC, that's backed, and indeed on the shareholder register is BlackRock. So you've got some proper credibility there. Tether, some clouds over Tether always have been, and it's deemed to be worth 19.95 on the dollar. And by the way, in crypto, no one worries about that sort of thing. That's one bad day in the market. So, I know in the old world, people would say that's absolutely terrible. But in crypto, people go 19.95. I'll take that. So, it's a very different Wild West landscape. But the future of the stablecoin is fascinating, and that's really one of the most important things here. Because right now it costs you far too much to transact USDC. It could cost $50 or something. But when this whole thing goes to proof of stake from proof of work, and when you start to get better designs and lower transaction fees, you have replaced banking. You've taken out the simple idea of the current account with digital cash. Now, the final point is, when you go on your phone and you go to your bank and you press buttons, that is not digital cash. That's a digital deposit. And it's quite different. So, where this is going is what's got me excited. And it's a fascinating journey. And the sort of thing that's happening today is horrible, but it's part of the journey.